What is going on, everybody? And in this video, we are providing you a state of the market and stock picks for July 12th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenom market that we are currently in. It is by far one of the best markets I have ever been in. Again, if you don't like sarcastic, don't subscribe. Otherwise, you can. But that being said, um, state of the markets, and I'll be honest here. I'm gonna go ahead and be honest, and come out and say that as far as stock picks, my stock picks are very limited because ultimately, what's going to matter is what's going to happen on Wednesday. Leading up into everything, Wednesday is going to really matter. Now, why is Wednesday going to really matter? Because we got the core CPI, and we're trying to gauge where inflation is at this point, even though what really ultimately matters, the root cause of everything, is essentially consumer confidence. Where is that at? So there's everybody still fearful. There's been a lot of dialing back in different sectors on people that even have extra spending money that are not going out and spending at this current moment because of the uncertainty moving forward. Now, as far as Wednesday, as far as the core CPI, that will again come out at 8:30 Eastern Standard Time before market, so pre-market. And what we're looking at here, what they're actually looking at is somewhere between 8.6 and 9.6 core inflation. So above the 8.8 to 8 or to 9% core inflation, excuse me. So above the 8.6 that we previously had, that is estimated. Now, if that comes any higher than that, that could really, I think, devastate the market. And we will see that 100-point basis move, essentially that 36 that I've been talking about, because I believe what's going to happen if we come higher than 8.6, even though it's estimated at 8.8, I think the Fed is going to at least do 75 points or 100-point basis move. And I'm leaning very heavily towards a 100-point basis move if it's anything over, if it's 9 or anything over 9 at that point. And understand that inflation is getting carried away. There's a lot of other different news that came out today. China is starting to lock down more again, which is more concerning. And we have to also understand that currencies are getting out of control. This morning, the yuan hit the yuan and U.S. pair hit a 25-year low. Now, this is very concerning because of the fact that all these big companies that are gaining revenues from overseas, when they try to convert it back to U.S. dollars, they are essentially getting wrecked in doing so. And so margins are going to be extremely jacked up going into this earnings. You're probably going to see a good portion of that, but I think it's going to get even worse in the Q3 earnings report, because I do believe you're going to see the full inflation during this Q3 earnings, that we're currently in. So starting from now until about, I think it's 3 months per quarter. So being said, I think in that Q3 you're going to see you're going to see inflation at its worst, at the peak, I believe. It's not saying it won't, because we also have some news coming out that there's rumors that Russia is going to shut off some countries in Europe from oil. Now, if this happens, there's some maintenance being done on pipelines, I believe, right now, currently in Europe for the next 10 days. And if Russia does something to manipulate that, there's going to be some major issues in Europe. And I've always talked about being a permabull. That's where I am. I don't like sitting here talking about this stuff because you're always getting about everything being really bad. But this is really, really bad. Like, there are some things that are getting to the point to where there's just no return. And we are, I think, at the point of no return at this point, especially if the Fed continue to hammer down on rates. Again, you're not solving the issue, the direct issue, which is oil prices are not coming down, that they continue to stay inflated. in other aspects. And if we get more rate raises, especially if they are trying to save face and trying to front run this thing, you have to understand that these rates are devastating everything. They're devastating employment. They're devastating companies from hiring. Companies are starting to lay off more, and making it extremely hard. And the Fed is okay with that because they are trying to combat inflation. And if you get inflation higher than 8.6, there's not going to be no end in sight, right? I believe you're still going to hit a couple more months of some really heavy inflation. Then at that point you might get some relief and start dialing back down. And so, being said, this earning will be pivotal to just start to see some of the numbers. And my concern is one of your best companies, Tesla. What if they don't hit expectations? It's going to be a big problem. And they just started laying off. Now, given they laid off some of the higher ups, and they started laying off some of the other departments, and then also on some other departments, and this is what is concerning. And so, if Tesla doesn't make revenues or doesn't do well, doesn't hit expectations, we're going to be in a whole lot of trouble. But primarily, again, the biggest concern here is the consumer, and they're not buying. And then also seeing the dollar continue to rip, be like crazy this morning, and then seeing that difference in the yen is a big telltale sign that bad things are potentially coming. It's not saying they're here; they could already be here, but right now the way things are setting up is not good. And then earnings are going to prove that. Some of your banks will do good, some of them won't. Some earnings, again, will do good. Just really depends. But if you have someone like Tesla not hitting expectations, which is a strong possibility that it could happen. They're also supposed to be, they're coming up on their stock split decision as well, if they're going to do another 3-for-1 or whatever their deal is. But then we got Google, I think, next week. So being said, this is a real concern. This is a real issue. And you're not going to just bounce back at a recession. It's not a quick thing. And I think over the past, 2 years has really kind of made people think that things just recover like they do 2 years ago. And that's not the way it works. We had one of the quickest sell-offs in history when the pandemic hit. And then you had one of the quickest recoveries after the pandemic when we started pumping the market full of tons of money. And so now you're left with the aftermath of what that is, and we're living through that now, and the outcome of that, and that this isn't going to recover quickly. You're going to get this nasty, volatile market over the next potential couple of years, and then people are starting to talk about 2023 actually being when the recession hits. This could be a strong possibility, but at this rate, the rate in which the dollar is just flying up, the next quarter. I think next quarter you're really going to see peak, and then from that point you're going to get, I think, back half of the year you get some sort of rally. Really just depends. Now we could go through a recession, and the market will be perfectly fine. The market can push up. The market kind of, I think, front runs a lot of different things that are going on. You have something like real estate that kind of lags behind on everything. So you'll see the move in the market go up before the actual economy recovers, before housing and everything recovers as well. Again, that rollover on housing and the housing sector is much slower than anything else. So being said, and we're hitting a lot of peaks with housing right now too, so that's something to keep in mind. But we'll have to see how that plays out. We have to see how everything plays out moving forward. But with all that said, this is what we're looking for on Wednesday. So technical wise, we broke that. We got a lot of that China news on lockdowns. The yen, I think, ultimately really caused us to sell off heavy here. The market tried to rally. It really, really tried. It wants to get in earnings mode, but this is my concern, is that it wants to get in earnings mode and it can't push. It's just selling. So when you try to get in earnings mode and you can't even push, that's tall tale that expectations, I think, for this quarter are actually through the roof too. So That's another major concern. If inflation was that bad, the dollar has been so strong that your Apples, right, your Teslas, right, their revenues aren't going to be the same because of the fact that the dollar is so strong that other currencies are weak. So any money they're getting from China or any of their other factories around the world, other revenue resources throughout the world, they're all going to be hit, and they're going to take a hit there. Again, they do adjust well. Apple and Tesla do adjust well, but I think we're going to see quite the shitstorm coming up potentially here in this quarter. If not this quarter, I think it'll definitely hit next quarter, and then we'll see how we do from there. But with that being said, the market here, again, if we open up flat, I kind of feel like we're going to gap down tomorrow. Could potentially gap down to 37.97, and then potentially head down to the 100, or at least head down to the 37.45. I think we'll be there or float around here going into Wednesday, maybe another gap down. And then if we get really bad CPI, we'll be right back here at the 36.36. So again, like I've talked about, the market's been hovering around the 75. I think it was attempting to go for 50, but that increased dollar strength, I think, and the with the yen, and also getting the China lockdown stuff, just sold the market off today. Like, we're almost most definitely going to get at least to 75. And then I think, again, core CPI, depending on where that is, if that's an underestimates, you can make the case that it could be a rally. But in my opinion, if it's anything, if it's 8.6 or essentially 8.7 or higher, I think we're going to float here. I think this would be the top. And then if it's below the 8.6, I think we could potentially rally. But again, I think it's short lived. It could potentially try to run back to the 50, essentially at the 40-50. But we have to see. Everything is a have to see. Hurry up and wait. What's the next data to come out? So that's really what's concerning. I want to pull up, instead of doing Bitcoin, I'm going to do dollar for right now. As you can see, the dollar just absolutely been ripping going into today, and it's not showing any signs of slowing down right now. You do have some resistance here at the 109. Previous high from a couple of years back is the 120. So we're looking to see how far we can push up here. Again, the further this pushes up, the more it's going to hurt. The more it's going to hurt the U.S. economy, especially for any kind of trade and stuff, because you have to realize that if there's any revenue generated from other companies outside of the U.S., they have to essentially exchange that. That exchange rate is going to be so jacked up that it's going to start gouging into profits. So the dollar is there, but we'll look at Bitcoin real quick. Bitcoin obviously holding like the market. Again, if the market gets into panic mode, this thing will start selling down. I don't know how far it could get. You got that 15. Again, you got those mental levels, right? You got the 15K, the 10K mark. 10K mark could be a strong possibility if the market really starts to shit the bed. So we have to see what goes on there. Then we're just going to go over the industry leaders here real quick. Tesla, again, this is a telltale sign. The whole thing with the yen, the whole thing with China lockdowns, a big concern, made Tesla completely flush down. Again, your industry leader, this could potentially hit the 625. Again, if it breaks 625, we're going to see 500 very quickly. So really keeping this one on watch, seeing where it goes. Again, we have to realize that you're starting to get into earnings too, so there's a lot of premium. If you trade options, there's a lot of premium baked into these, even because of the volatility. So to really trade any kind of options around right now is, unless you're close to being in the money, a lot of these contracts, you're just going to lose money if it's anything outside of essentially almost being in the money. If you go outside of in the money, maybe the next level up, you're going to realize that you're going to lose. It's going to burn quicker than it is going to actually make you money. So the theta and the delta are burning fast right now because so much is baked in. So Tesla really watching that. I want to see what happens there. BA, Again, another big one here, still holding this 134 mark. Again, question if we do break this, which I think is really waiting on the banks. If the banks break, I think this will break. So keep that in mind. Again, the 134 watching. If we do break out the 143, I think we get a massive push up from that point. Again, I think we're only going to possibly hit that 50 basis points is kind of where we're looking at. And because we're kind of waiting on the Fed, and again, I don't think we're going to have all-time highs anytime soon. I think it's going to take some time. First, we have to figure out what's going on with the Fed. Fed has to get control of the environment of inflation. Once it has that, then you can start talking about all-time highs. And it won't be quick, right? I think it's going at that point, you're going to chop on the way up. You got a lot of resistance to break through. But right now, things just aren't looking good. And let's bring up the banks. JPM's got earnings on Thursday. Again, it's been consolidating. It really looks like trash. In fact, it's been essentially playing between the 115 mark and roughly the 110 mark. It's been kind of floating around there. So playing that range, I think this range will continue to play tight before we actually get any kind of breakouts. But again, I want to keep this video pretty short, even though it's not very short. There was a lot of information. There's a lot of focus on Wednesday. So my focus is completely on Wednesday and trying to determine what comes of that report pre-markets and go from there, right? Like, I think if you could say, you can make an argument that if it hits expectations are lower, it could be poised for a rally. But if it's anything above that, I think we're going to start doing some heavy selling. And then we're going to start seeing what the banks, TCM has, and then we'll see Tesla and I believe Netflix next week to really kind of gauge the rest of it. So with all that being said, if you made this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.